Did you know that Mullen stock has risen for 5 consecutive days? This comes after a successful reverse stock split on May 4th, which helped the company comply with Nasdaq's $1 price requirement. However, there's a new development that has caught the attention of investors. According to Ortex, Mullen's short interest has risen to a staggering 125.54%. This is quite rare and has only happened 15 other times. The reverse stock split caused shares to plummet on the day of the announcement, but they have since recovered and are trading at $1.50 as of May 8th. It's also worth noting that a short interest above 100% is uncommon and signifies over-leveraged short positions in a security. And in this video, we will dive into Mullen's latest revelations and the potential outlook for short selling in the United States. Short selling is a strategy trader and investors use to make money when a stock or security's price goes down. It's not for beginners, and it's usually the experienced traders doing it. Traders can use it to guess what will happen in the market. In contrast, investors or portfolio managers might use it to reduce risk when they own a related security or already have a long position in the same one. Now, let's look at what happened with GameStop in 2021. First, retail investors on Reddit noticed that the stock had a very high short interest rate of 140%. They decided to buy up the stock, which caused its price to rise. Short sellers who had bet against the stock were forced to repurchase it to cover their positions and avoid even more considerable losses. Interestingly, Goldman Sachs analysts pointed out that short interest rates exceeding 100% of a company's public shares had only occurred 15 times in the previous decade, and GameStop was the 16th. So, Mullen has the potential to put the squeeze on short sellers just like GameStop did, but it would need a lot of buying pressure, like what happened with GameStop and AMC. However, the main hurdle in this scenario is the issue of dark pool abuse. According to the data, around 70% of Mullen stock trades are taking place in dark pools, which means that the demand from retail investors in the stock market is being suppressed. While a short squeeze for Mullen might be possible, it will require significant buying power to make it happen. In late April, the EV company announced that they'd hired an external legal team to look into possible market manipulation and illegal short selling. The company's spokesperson stated that the investigation was launched due to the unusually high trading volume and the failure to or FTD levels observed on short sales. Mullen announced they would work with Shareholder Intelligence Services or ShareIntel and an undisclosed outside counsel to gather and study data from broker-dealers and clearing firms. The aim is to spot any signs of market manipulation. ShareIntel will also offer Mullen a way to keep track of equity flows and monitor any suspicious or unusual trading activity. Mullen emphasized that as a fiduciary to their shareholders, they will try to address any wrongdoing in Mullen securities. Meanwhile, reports indicate that a shareholder wrote a petition in January. The petition is titled "Mullen Joint Fight Against Illegal Trading" and has collected over 10,000 signatures. It urges Mullen's board to establish an illegal trading task force, just like Genius Group did, to scrutinize any purported market tampering. Data also indicates that Fintel observed a notable increase in FTD shares for Mullen between January and March. In March alone, there were 205.42 million shares that still needed to be delivered. And Mullen typically sees an average daily trading volume of 263.97 million shares. Furthermore, JP Morgan reports that the U.S. government plans to ban short selling. JP Morgan analysts have suggested that regulators in the United States may focus on short selling to prevent the banking crisis from spreading further. Some experts in the industry are worried that short sellers are causing fears that more banks will fail, especially with the recent collapses of multiple banks. The analysts at JP Morgan pointed out that this concern could temporarily lead regulators to stop short selling activities. The American Banker Association, or ABA, recently sent a letter to the U.S. Securities and Exchange Commission, or SEC, on May 4th. ABA's Chief Policy Officer, Naomi Camper, expressed concern that short sellers could manipulate the market. In addition, she pointed out that some shares are trading contrary to the underlying fundamentals. JP Morgan also raised this issue in a note, stating that they have never seen a situation where the FDIC seized a perfectly healthy bank in a short period. In addition, 3 regional banks with $532 billion in deposits have already failed, but short sellers are making a fortune. According to Ortex, shorters have profited $1.2 billion by betting against these stocks. On May 4th, shorters reportedly made $379 million by shorting First Horizon, PacWest, and Western Alliance shares. Even with the crisis, most Americans still trust their banks, according to polling firm Ipsos. The survey revealed that most Americans have confidence in the stability and safety of their bank deposits. About half of the respondents also support government bailouts for struggling financial institutions. Moreover, an online analyst thinks that while illegal forms of short selling should be stopped, legal short selling is necessary to provide opportunities for aggressive trading and growth and the potential for shorts to get trapped and provide upside potential for retail investors. But before we continue, we want to thank you for watching this far. But let's go back to what experts think of Mullen stock. As for Mullen stock, experts have stated that there aren't any shares available for shorting, and a Mullen squeeze may now be happening. The stock has been unpredictable in the past 5 days and dropped by nearly 30%, but it's still trading above $1. Another reason to keep an eye on Mullen is that, according to Fintel, there are currently no shares available to short, which could drive up the stock's price even more. But it's crucial to understand that Fintel's info only covers stocks accessible through a specific prime brokerage and not all of them. This means there could be shares lurking in shadowy trading venues or other brokerages that Fintel hasn't accounted for. Nonetheless, Mullen could experience a short squeeze and become the hot stock to watch out for. Mullen has a super high short interest rate, which means many people are betting its stock price will drop. Some people might be doing illegal stuff to make this happen, and an investigation is happening now. A short squeeze could happen, which means the stock price could suddenly go up a lot, but this would only happen if enough people buy the stock. Unfortunately, it's hard to buy enough stock because some people are doing shady things in the dark pools of the stock market. Moreover, some people at JP Morgan think that short selling might be banned soon, making it illegal to bet on Mullen's stock price going down. So, if short selling is banned, does it allow the stock to continue to perform better? And what impact could this have on other stocks with high short interest rates? We want to know your thoughts, so please drop your thoughts in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know more about the recent reverse stock split, then make sure to click and watch this video right here and enjoy. And that's the end of this video.